Hi everyone, welcome to Single Value. So today I want to talk about 10 stocks that I think will perform really well next year in the year 2021. But first I want to take a moment to thank you guys for all the support you've given me. Like, this wasn't something that I thought I would really be doing in such a large scale. Like, this year alone, it's over 150 videos. But yeah, like, it's really just brought out the motivation in me to look at stocks. And I've really enjoyed it, especially also being able to interact with you guys. So yeah, like, I look forward to going into 2021 and just going in with the same momentum, reviewing just as many stocks, if not more. And then yeah, I'll see how things go. But I just really want to thank you guys just for everything this year. Like 2,380 subscribers later, nothing gives me more motivation to just really see those numbers that people actually do appreciate what I do. So yeah, I really want to take this chance to thank you from the bottom of my heart, and I hope you had a really good Christmas, and I hope you guys have a happy new year, of course. And yeah, like, let's get into this. So 10 stocks out of all the videos that I've done this year. So that's like a filter on the filter, because before I make a video on a stock, I'll look at a bunch of stocks and I'll just choose the one that I like the most. And then now I'm trying to choose 10 stocks out of well over 100 stocks that I quite like this year. But of course, a lot of them would have changed in valuations. Some might have not have performed as we've liked. So yeah, I'm going to choose 10 stocks based on their current business models, their potential valuations, and also looking at the economic climate for 2021. Of course, that could change itself, but I'm just going to choose 10 stocks in terms of what I think will do really well in 2021. This may change, but based on what I think now, I think they will perform really well going forward into the next year and even beyond that, because I think these are really, really good quality companies. All right, let's jump right into it. Of course, I do have to mention that I won't be able to talk about these in a lot of detail. So feel free to just scroll along these videos. Because yeah, like, I don't think it will be too difficult for you to find what you need to find. But there's no way I can do 10 stocks and talk about them in detail. So chances are, if I talk about the stock, it's on this video list and you can look at it in more depth, of course. All right, so yeah, I'm going to jump into it. All right, so number 10 is Alster. This is a company using AI for drug discovery and is trying to accelerate the time frame in which they can discover drugs. Say, like, they're working with Eli Lilly right now, and at the start of the year, they started to partner up and then create a new vaccine, which Eli Lilly is bringing to the commercial market. And every time Eli Lilly makes a sale, basically Alster will get a royalty for that. And if you think about how many programs they have running, that if quite a few of these actually work out, they end up with a really, really large royalty stream going forward. And hence why I see this company doing really well next year. But even beyond that, of course, I think this is a really good long-term hold. And of course, biotechs do take their time, hence why this is at number 10. But I do see a lot of potential in this. Or else, like, if I had more of a control on, or knowledge on, when all these programs will actually come into fruition, then I'd put it higher in the ranking. But hence why I would still, this is a biotech, there's a lot of vague kind of timelines in this, but I do see a lot of potential in this company going forward, especially if you hold it for the long run. And at 11 billion valuation for a biotech, the valuation isn't considered too high for its potential. And I really like its business model going and what it does. So hence why this is at number. Number 9 is Lordstown Holdings. This is a company using artificial intelligence to do personal loans. They kind of think the whole credit score system is very outdated. So they want to come along and just change that, because they believe, firstly, 80% of people have never defaulted on a credit product, and while only 48% get access to prime credit. So they kind of want to take this new approach where they can give out more loans, because they know people are actually much more credit worthy than they look based on their credit rating. And also they can give more people low interest rate loans, and it's just going to be better for the customer and the bank itself. They currently have 10 banking partners. One of them does make up like 60% of revenues. So if they can sign up another big banking partner, there is a lot of potential for this company to really run. I think the more they sign up, the more they can actually build their case. So the artificial intelligence just gets even better as time goes. So hence why I see the huge upside for this company, even at a 3 billion valuation, which would represent more or less fair value right now. Their IPO pricing not long ago was around $20, currently at $43.96, of course. So if you do a little price anchoring, it seems high, but in the scheme of things, not really that high. There's a lot of upside going forward, of course. And yeah, like I like this company quite a bit because I think they're coming in and really disrupting how personal loans are done. And also during this year, they did have quite a bit of interruption in terms of personal loans where they weren't able to give out as many personal loans. But I think next year, without interruptions, then and if business can just flow as business as normal, then they're going to give out a lot more loans than they this year as well, and their growth is looking really well. So hence why this is number 9. Number 8 is a company called YALA. This is a company that's probably really under the radar, but they've done some really good work on the social media scene. They've managed to grow their users from about a few million to 14 million when they last reported their quarterly. And this represents a large upside at a 2.4 billion valuation when every big social media platform that is on the market right now is at least 10 times higher. And these guys are really showing some dominance in the Middle Eastern, North African area. So I think they're going to perform well going forward because they're really tailoring to that user group, whereas no one else is. And I think they're going to just continue to perform well, and also they're really profitable, which you can't really say about a lot of growth companies. So firstly, if you're profitable, you can continue to spend more on growing yourself. And also that the only really like social media platform that has really gained traction in the last few years. Like there's been some that have really gained some traction, but in terms of like the growth that has actually happened to go from to increase your user group by many times, I don't think there's really many other social media companies like YALA. Hence why I think there's a lot of potential, especially at this valuation, for this company to perform really well going into next year, of course, and the years beyond. Number 7 is Bridgetown Holdings. This is a special acquisition company backed by Peter Thiel and Richard Lee. They're looking to merge with Tokopedia, though it hasn't been officially confirmed yet. It is still in negotiations, so this could still fall through. But even if it falls through, I still believe these two investors will still find a very good deal going forward. So you might be paying a premium, but I think you're paying a premium for the investors, Peter Thiel and Richard Lee. And then secondly, you're paying a premium because of the possible merger for Tokopedia. If this can happen, Tokopedia is a massive online retail giant in Indonesia. And this would represent a considerable upside for this company, because I think the company could trade as much as 30 to 40 billion dollars, especially when we compare to a company that trades at 100 billion, and that one is called C. And yeah, I think this company will have some really good upside, but that's why I'm looking at Bridgetown. But I'm kind of just like fingers crossed that the deal could happen. But if it doesn't happen, I think you still get two very good investors that will find you a very good deal. Number 6 on the list is Lion Electric, who is basically merging with Northern Genesis Acquisition Corporation, which is a special acquisition company. And once they merge, at the current valuation, they would have about a 3.5 billion valuation, which I kind of see there is still some considerable upside, particularly the fact that this company is already in production with their school buses, and then they're looking to get into production with their delivery trucks. And yeah, like there's not a lot of companies in the EV space that is going into production, and then also these guys are heading into areas that no one really is targeting too much. Like these guys are heading into the really utility spaces like school buses, garbage trucks, transportation, like kind of like delivery trucks, which is not a lot of companies in there, and these guys are focused in Canada and the US. And I think there's going to be a considerable upside, just EV in general, and particularly with a company that is already getting into production. They've signed a customer like Amazon, so I think there's a lot of potential going forward with this one. Number 5 is Alster, who is merging with this special acquisition company, Colonnade Acquisition, and at the 1625 pricing, they would be merging at a value of about $3 billion, which I still think will be quite low in the scheme of things, because you're looking at, say, a company like Valentine, which trades at a $4.5 billion valuation. You're looking at Luminar, who's trading around at 12 to 13 billion valuation. So for a company that's around a 3 billion valuation, with higher projected revenues in the next few years than those two companies, and also they're focused on more different areas, so it reduces their risks, rather than the other two who are really focused on the automotive market. So that's why I believe there's going to be a huge upside for this company going forward in the next year, and even beyond that, of course. Like a lot of these companies that I'm reviewing right now, will have a really tremendous future going forward, into the future, not just the year itself. And that's what I like to know, that the growth won't stop. There's always going to be continued upside. Alright, so I think that's the end of that one. Number 4 would be Metromile, who is merging with a special acquisition corporation called Insu Acquisition, and at the current valuation pricing of $15.30 per share, they would have about a 1.8 billion valuation, which I think is still, on the lower side of things, particularly when we compare against a company like Lemonade, who is trading around that 5 billion valuation, if not higher recently. So I reckon that these guys and Lemonade are doing a lot of work in disrupting the insurance market, bringing something that is never really done before, and are doing a really good job at it. And I think these guys are going to do really well. So Metromile itself is specializing in car insurance by doing a pay per mile service. And so far, they're doing really well in showing that the metrics really work. That firstly, they really want to prove out their system, that they could do things in scale, and so far they're really doing things quite well. They're growing at a really good rate, and I think that they're going to do really well next year. But their best years are actually going to be coming in the next 2 to 3 years. But I think the share price will continue to move up, especially when you compare with Lemonade. These guys are really, really undervalued, so that's why I think they will continue to increase in pricing next year, and even more the years going after that. Number 3 is Virgin Galactic. This is one of my favorite companies. I think they're going to perform really well next year, especially once they get their test flight underway, and then it is a very, very high chance that they go commercial next year. So that's why I see a huge potential on the 6 billion valuation. Firstly, I think in January they're going to perform their powered test flight, and assuming that succeeds, I think they'll perform their second powered test flight in the end of March, and they're looking to probably fly Richard Branson in April, I imagine. If not, if they really wanted to keep with their timeline, then they're going to try to aim for March, but I think to be a bit more conservative, we'll aim for April. And I think in May they will go commercial, if there's no more delay. But of course, with this kind of company, there is always more delays. So I'd always prepare that there might be delays, but if there's no delays, then it's a massive bonus. But at a 6 billion valuation, if they can succeed, the valuation just goes up a considerable amount. And I think if you hold on to this for next year and are able to really hit all their targets, the valuation for this company is going to skyrocket, just like the business, and it's just going to be really, really good for all holders, and especially also people who are space fans. It's really cool to just be able to see that this service is actually going to be possible. Number 2 is Lordstown Motors. This is an electric vehicle company going into production in September. And I think this, once they get into production, the valuation is going to really go up, particularly at a 3.5 billion valuation. It is much more on the low side right now, and the minute they head into production, the valuation goes up quite a bit, particularly that they have an order book of about 50,000 of their vehicles, and that will continue to increase. The pricing of their vehicles is very reasonable as well, so it comes with a lot of utility. A lot of businesses will want to buy their vehicles, and also, yeah, I think next year just is the year for electric vehicles, and Lordstown Motors is going to be at the forefront of that. The valuation is going to go up, especially once they head into production, and in the years preceding that is also going to be really, really good as well. And I think this represents a good chance to just enter at a really low pricing. I like everything that this company does. It has the production facility, it has the expertise, and it has the product. So what's not to like about this company? Number 1 is Catapult, which is a fintech, and I'm looking to merge with this special acquisition corporation called FinServe Acquisition. And at the current pricing of $13.95 per share, it gives them about a 1.4 billion merger valuation. And there's a lot to love about Catapult, particularly in the environment that we're in. There's a lot of people that will be looking to that lease to own model, which Catapult specializes in. And I'm really impressed by Catapult's recent results, going from 92 million in the revenue last year to expecting about 250 million this year, and in 455 million for next year. Over the 2 years, that would be a 5 times increase in revenue, which would be substantial, and it just really shows the potential for such a company. And particularly in a type of really recessionary type environment where not everyone is able to buy everything up front, and they may need to just kind of get into this lease to own model to just help balance their cash flow. So yeah, I think for Catapult, this represents a large opportunity, and also the valuation is very, very low at this 1.4, that the upside is just so considerably high, that hence why I put this as number 1, because I just believe there is so much value here with Catapult. If they can get this over the line, which I think is looking very much like that, then yeah, it represents so much value for you to buy at today's prices at $13.95. And I think next year this company pricing will move up quite a bit. Yeah, like particularly that they're at a 1.4 billion valuation, and in the next few years they expect $1 billion in revenue itself. So I'll let you do the math on this one, and yeah, you can really see that potential. Yeah, so let me know what your thoughts are of what my companies are, like what my list of 10 companies are. But also be really happy to hear what your list of 10 companies are as well. Feel free to like and comment. And yeah, I'll see you in probably the new year, unless I make some videos prior to this. But until then, good luck investing, everyone.